everyone, a very good morning. You're watching Market Fatafat on ET now with me, Mubina Kabasi. Markets on a strong footing. We are just about near that record high levels, 12,300 and counting right now. The Sensex as well has surpassed 32, pardon me, the Nifty Bank as well has surpassed 32,200. So great gains seen across the board. Sensex making its way towards 42,000. But of course, it doesn't get any bigger than this. This is the exclusive chat that our managing editor, Nikunj Dalmia, had with Big Bull Rakesh Jhunjhunwala, who believes that the budget may dole out a relief for the realty sector. And no surprises for guessing today, that's one of the top sectoral gainers. He also adds that the government must assure the business community that it is on their side. Listen in.
I personally feel government should, make it long-term capital gains tax-free by enhancing the period. From 1 year, you make it 2 years. So up to 2 years become all short-term capital gain. I think it will lead to net gain to government revenue. And it will lead to a big gain in sentiment. Enhance the period of long-term capital gain, but make it tax-free. Then I think we should give a lot of relief to the real estate sector. We can make a view that anybody who buys a house in the next 12 months, whenever he sells it, there is no capital gains. First of all, people who generally don't buy houses to sell them, right? And second thing is there is no immediate loss of revenue. If you say that whenever a house is, you buy a house, if you sell it after 2 years, minimum period, there will be no capital gains. And I think there should be other relief for the real estate sector, right? I think we should enhance the amount of, and I think there should be big relief for tax payments for income from 10 lakhs to 25 lakhs.
So it's high time that the government now takes notice of the demand side of the economy. That needs to be fixed urgently, according to you.
See, nothing can be fixed by one action. It's a process. So a lot of government action is needed in order that, the economy comes back to its growth potential. Second thing also, we have to communicate by the budget to the business community that we are on your side.
Well, you can catch this entire conversation that Nikunj Dalmia had with Rakesh Jhunjhunwala on ET Now, and also, of course, all of our digital channels, YouTube, Twitter, Facebook. You can take your pick. And, of course, don't forget, today at 4 p.m. is when we'll be also playing out the interview. Okay, now let's kickstart Market Fatafat. We have with us today on the technical Sameer Chauhan of Angel Broking, and Varun and Soumya from our research team as well join in. Morning, everyone. And Soumya, of course, how can we not kickstart the show with an Infosys? I think more than the results, the focus is also on that audit report, the forensic audit report, or you could call it the investigation into the whistleblower complaints.
Well, yes, exactly, that's right, Mubina. In fact, the management has been given a clean sheet by the committee as far as their involvement is concerned for any wrongdoings. Well, this was a big key takeaway from the meeting that happened on Friday after market hours. In fact, talking about the numbers, the Q3 earnings are pretty much in line with the street expectation. Well, strong growth in the digital business, which is going to definitely augur well for Infosys. Not just this, in fact, the management has actually revised the FY20 guidance as far as the revenue is concerned from 9 to 10% to 9.5% to 10.5%. Margins came in marginally lower than expected, but I think that was not really a concern. Overall, the results were good. And in fact, all the analysts and the brokerages on the street are really bullish as far as Infosys is concerned. They've given a thumbs up. Either they've hiked the price target or they remain status quo as far as Infosys is concerned. But definitely the fact that the management, the CEO and CFO have been given a clean sheet is going to definitely remove a big overhang from the stock. And we've seen the stock rallying today close to about 5% on back of these latest developments.
Okay, that it is 4.8% higher. Now it's 770. In fact, this is one of the best, uptick that we have seen in Infosys in about 6 months. All right, moving on, Samit, let's talk about these power financing companies. First up, REC. It's a third of 1% higher at 143. Anything that you would like to observe here?
See, Mubina, this stock has been consolidating since last 2 to 3 months, wherein the lower end is somewhere around 130, 132, and if the stock comes around that important support, we tend to see some kind of buying emerging. And at the higher level, 145, 147, these are the levels to watch out for. So if this stock has to regain any kind of strength, this stock need to surpass 147 on a closing basis. If that happens, then yes, we could see this stock heading towards 154, 155. But as of now, we would expect this consolidation to continue.
Right, so that's Sameet's recommendation on REC. Lupin is another stock I'd like to flag off because the company on Saturday said it received 2 observations from the US health regulator following the inspection of its Nagpur manufacturing facility. A PIA or a pre-approval inspection was carried out by the USFDA at this Nagpur facility, which essentially is an oral solid dosage manufacturing facility between the 6th and 10th of January. And the inspection closed with 2 Form 480 observations in the Form 483. That means they also notified the company's management of objectionable conditions at the facility inspected. Now, this Nagpur facility, remember, is the latest oral solid dosage facility and the 7th USFDA inspection at the facility. So now, obviously, the company will be trying to meet and comply with all of the CGMP regulations, at this facility in order to get the clean chit. It will submit a comprehensive response within the stipulated time frame, with the stock price of Lupin down by about 2%. Okay, Varun, what's also losing today is Yes Bank. This after it said no to one of the big, guys who wanted to pump in some money in the bank.
Mubina, so let's begin with the fact that the stock is down today, a fair bit. So obviously now even the retail shareholders, which now comprise the chunk of Yes Bank shareholding, are starting to really wonder whether this fundraise is going through or not. As far as institutional guys are concerned, I'd be very surprised if any large institutions would even enter at this stage or still believe the management. Now, they've okayed the raise, 10,000 crores will be allowed, and the board is all fine with that. At the same time, Irwin Singh, who's bidding roughly 10,000 crores, has been rejected for reasons that are unknown to us. Now, the SciTax offer, which still stands on the table, while approved, they still haven't gone ahead and accepted the offer. The conditions precedent couldn't be met, so they're going to be pushing that forward to the next board meeting. So, it's just an absolute joke because this has been going on for a couple months now and there's just no fundraise looming. So the counter is starting to give way, and I think the investors are as well. Definitely having an impact on the valuation, and the lower this price falls, the higher the dilution gets even when the fundraise comes in. So it's really not auguring too well for them. Q3 is right around the corner. We're going to see those slippages. That watch list is going to obviously send out some new names, and it'll be interesting to see if there have been any recoveries or how the CASA has moved as well. But on all fronts, I wouldn't be expecting anything too positive from this one, and numbers should be out fairly soon. We'll update you when we get those.
All right, so that's Yes Bank for you. It's tanked more than 6%. Okay, Soumya, let's talk about a result reaction. DMART, how has the quarter been?
Well, in-line set of numbers, and definitely the street is cheering on fact that the revenue saw a good growth of about 24% on a YY basis. Even that was reflective in the profit line, which saw a good jump of over 54%. Well, the management said this hike in the profit figure was definitely because of improvement on account of revision in the corporate tax rates. And talking about the operating performance, the EBITDA was up by over 31%, and in fact the margins also expanded from 8.3% to 8.8%. Apart from this, the company opened 7 new stores in Q3, and that's the update on DMART and on their Q3 results. The stock as of now is pretty much flat, almost up by 1%.
Okay, so that's, essentially the view then on a DMART. Avenue Supermarts was actually gaining more smartly, but now it's just left with gains of about 0.9%, but nevertheless making its way towards 1900. Okay, and Sameet, the other company that we want to talk about is PFC. You already spoke about what you believe REC could do. What about PFC?
Well, unlike its peer counter, this stock has been doing fairly well since last couple of weeks. We have seen good traction from the levels of 114, 115, and stock has broken out from its recent resistance zone, which was around 120, 121. So from here on, this northward trajectory is likely to continue, and we expect this outperformance to continue. So 125, 128, these are the levels to watch out for in case of PFC, and any minor dip probably towards 120 would make it an attractive risk reward ratio. So we remain upbeat, and within the power finance companies, PFC remains our preferred pick.
Okay, PFC is higher by 0.6% in trade as we speak. Okay, GAIL India as well is something that's worth flagging up because it's another day of gains seen over here. Do remember that this stock did find itself under pressure for the most part of last month because there was that fear that, after the Supreme Court gave its ruling on the definition of AGR, it would essentially encompass every PSU out there, every company out there that has a telecom license, even though the revenues that the company may be earning from telecom would be negligible or almost zero. GAIL is one such company, as is perhaps even a power grid, and hence there was a fear that there could be a demand notice on GAIL India. Now GAIL says that they haven't really received any demand notice as such. And remember, last week on Friday also we had a Bank of America brokerage note that was released where they believe that this one is worth a buy right now. In fact, they are also watching out for a target of 223. That's a decent 100 rupees upside from these levels. They believe that the risks are overdone, and at 126 the stock certainly is quite cheap in terms of valuation, and hence they as well had a buy. Okay, Varun, meantime, I think realty is the buzzword. We did have Rakesh Jhunjhunwala talk about how realty could be one interesting spot to watch out for. What does Morgan Stanley have to say today?
So, I'm just going to draw a comparison to the financial sector. So if you just look at all the trouble in the financial sector, while it has created a lot of turmoil, what it's done is for stronger players, in this case the private banks, or the stronger NBFCs, let's say like an HDFC or a Bajaj Finance, or even on the smaller side like a Canfin Homes, all of them have come out and spoken to us about the huge opportunity that has come up in the sector because all the weaker players have been weeded out. Now in the last year, what's happened in the real estate sectors with all the regulation coming in, as well as acts like RERA, there's been a similar effect where you've seen the smaller players who are, stuck, unable to fund projects or have problems with funding, or for whatever reasons they haven't sold off the inventory. They are all going to slowly be phased out, and this same kind of crisis is also going to turn into an opportunity for the larger, more organized players. So guys like DLF, Sobha, Prestige, Oberoi Realty, Godrej Properties, they're all the more formidable players, and they'll be able to ride this cycle out. And according to Morgan Stanley, there's a huge earnings re-rating expected for these guys, as well as the ROEs and the balance sheet should improve as well. So what you're going to see is a similar trend kind of play out where, basically the financially healthier companies are going to really be able to leverage their capabilities and grow ahead of the smaller peers who are going to have a tougher and tougher time. So that's what Morgan Stanley is pointing out in real estate.
Yeah, all the realty stocks today are gaining. They continue to buzz today as well in trade after a great Friday session. And Samya, L&T Finance, what's the latest over there? What does the brokerage community have to say?
Well, this one's from UBS. They are very optimistic on the entire NBFC sector. In fact, they believe that the sector is staged to go on a revival phase, and in fact, the current liquidity is abundant in the system. Not just this, the cost of funds going to come down given and in fact, we'll see margin expansions from the current levels. In fact, they also say that despite the fact that the credit demand has remained weak, NBFCs were actually able to increase their share in terms of the total credit system in the 8 months of FY20, given the fact that despite the fact that actually 2019 was a challenging year. In fact, they've initiated buy coverage on L&T Finance with a target price of 165 rupees per share. They say that stable asset quality is the key reason for the re-rating, and the risk on infrastructure projects have actually come off. There's lower competitive intensity, and new initiatives is going to definitely support loan growth in L&T Finance. And not just this, lastly they add that the easing liquidity would definitely help in lowering the cost of funds and definitely on margin expansion. So definitely a positive note by UBS, and the stocks are gaining close by 1.3% on back of this positive note.
Okay, that it is gaining. It's at 123 rupees right now. Okay, Sameer, another stock that's, I suppose, worth flagging off is the Federal Bank. It's at 89 rupees and it's, been catching a lot of traders' attention at this point at 90 rupees. What's your view?
See, clearly this mid-size private banking names are clearly struggling since last few months. There is no buying momentum at all. The real action is clearly seen in the larger names like ICICI, HDFC Bank and Axis Bank. So this stock is clearly, Federal Bank is struggling around its 200-day moving average, which placed around 92, 93, and in last couple of months, stock has made various attempt to surpass this level, but all those attempts were unsuccessful. So if this stock has to gain any kind of momentum in the upward direction, it needs to surpass this strong hurdle. So 90 to 93, these are the levels to watch out for in case if the stock managed to surpass on a closing basis, if volume starts picking up, then we could see some traction in this counter. As of now, this consolidation is likely to continue.
Okay, so the stock price then of Federal Bank right now is just making its way towards 90 rupees. Let's take a look at what the RWI small case is doing right now as the market is at record high levels. The RWI small case is just about approaching the 590 mark. So great move seen over there as well. And now we'll take a very short break right here on Market Fatafat. Do come right back. Okay, welcome back. You're watching Market Fatafat. Let's cut across to the TRAI chairman, R.S. Sharma. He's speaking on the new tariff regime.
And as I said, the basic, sort of premise of that was to create a regime which is transparent, which is non-discriminatory, and which has good sort of growth potential for the business. Now, as any new architecture or any new sort of structure which is created, obviously, once it starts operating, you find some flaws, you find some inadequacies, you also find some operational difficulties. So essentially, we watched it for about a year, and after about 6-7 months, we realized that there are certain things certain aberrations which have happened, certain things which have been left out, and so therefore we started a consultation for sort of changing those things which were affecting the consumers, largely affecting the consumers. And after a consultation, detailed consultation, we issued this new framework. And the broad ideas of those are essentially that the bouquet formation, we have made certain changes in the bouquet formation, and why those changes are made, we will be able to explain to you in case you have any queries. Maybe Mr. Gupta can throw some lights on the bouquet. The MRP of the channel which can become a part of the bouquet was earlier 19 rupees. So what has happened is that some of the broadcasters.
All right, that's of course R.S. Sharma speaking on the new telco tariff regime. Let's move on and continue with our buzzing movers and shakers. FDC is one stock I'd like to flag off because it's interesting to note the sort of rally we are seeing in this stock, not just today or last week, but right since the October lows. It's almost been a one-way upward journey for this pharma major. We don't talk about it very often. Remember last week as well, it got the thumbs up from the UK health regulator for one of its plans for having good manufacturing practices. That as well was a trigger for the stock. And today as well, it continues the rally to the third straight day of gains at 227 rupees. It's certainly been one of those outperforming stocks in the pharma space, a small cap company, and certainly catching investor attention. Okay, moving on, Varun, we've just received some news flow from All Cargo Logistics. Take us through that because we're seeing a sharp rally in the stock.
Right, Babina. So there's been a sale which is for one of the units of All Cargo. Now we're not sure which one, and they'll be generating around 380 crores of cash for this sale. So it's quite significant because the market cap of All Cargo is around 2,400 crores. So it's in excess of 10% of market cap that they'll generate from this transaction. And the buyer is also a very promising name that we like to hear from, a huge player from the PE space, and that's Blackstone. So whenever they come in and acquire something, it's a very solid asset transaction, and that you can count on the funds coming through. So should augur pretty well for the counter and help them to meet their working capital needs as well as any deleveraging or financing requirements which they have. And the stock's cheering that, as you can see, fairly in the green this today.
sharp spike is what we saw in the stock as soon as this, news hit your television screens. Okay, very quickly, moving on. Samya, we have the premium growth numbers for the month of December when it comes to insurance. What stood out and what didn't?
Mubina, in fact, it was a good 12% growth in the premium for the non-life insurance. Particularly talking about the general insurance space, we had New India Insurance reporting a growth of over 13.3% in the premium, and in fact, they actually command the highest market share within the public sector space. Close to about 14.6%. That's what their share is in the entire market share. And in fact, these numbers are pretty much better than most of the private players as well. So this one's gaining today on back of the robust numbers that they delivered.
Okay, the stock price is certainly gaining, seeing a nice amount of traction. And Samit, anything that you'd like to observe on Tata Chemicals?
See, clearly this stock made a near-term bottom somewhere around early September, and since then we have seen a steady up move in this counter, a series of higher highs, higher lows, and recently stock went into a consolidation mode after seeing a sharp rally. On Friday we saw decisive breakout happening from recent congestion zone around 680, 695, and the overall volume activity has also risen substantially. So that suggests that there's strong buying interest in this particular counter. So from here on, this move is likely to extend. We expect the stock heading towards 720, 725 over the next few sessions.
By the way, Tata Chemicals has also got that approval from the NCLT when it comes to the whole demerger exercise that it wants to conduct. So that as well could be an added trigger for the stock price today in trade. With that, we'll wrap it up on Market Fatafat because we're out of time. So Samit, Varun and Soumya, thank you for joining in. Stay tuned. Markets at Noon comes up next.